Welcome to episode 1864, take two. Yes, I had to record this one twice because the technology did not work the first time. Anyway, I want to wish our listeners and viewers from 189 countries worldwide a happy Thanksgiving. Oh, wait. Happy Independence Day for our American listeners, of course. And our president's a little mixed up. You know, he might think it's Thanksgiving. He's a little out of it. Yeah, someone shared this meme with me this morning, and I just loved it. I thought it was hilarious. It is a meme of good old Joe Biden, and he's all dressed up in patriotic garb for the 4th of July, but wishing everybody a happy Thanksgiving. And you know what? Sadly, this is not far-fetched. It's probably actually something he really said. Wouldn't surprise me. So today in America, we celebrate the 4th of July, our Independence Day from 1776. And if you think about it, it's pretty amazing. You know, we've got listeners from 188 other countries around the world. And hopefully many of you believe, as I do, how important the United States was in world history. And look, it's in decline, and it is declining precipitously. It is declining so fast, it's head spinning how quickly the United States is just falling apart. Let's hope that the pendulum swings the other way. You know, we do have these checks and balances with the three branches of government. We have a fantastic Constitution. And just think about and appreciate the United States Constitution for just a moment, because it was only the second example in all history where a ruling class, where a government or royalty, a monarch, restricted its own power and decided it was important to do that so that individuals, people, citizens would have more power. That's like a miracle. I mean, that's like saying, okay, you're in a position of power. You're the CEO of one of these disgusting, scummy, woke companies that is, you know, ripping off the shareholders and oppressing the employees. Maybe you're Jeff Bezos. Oh, actually, he seems to have gotten his head on straight lately with his last couple of tweets. So cheers to him. He's now, you know, being critical of the Biden administration, rightfully so. Took you long enough, Jeff. Anyway, say you're one of these scummy CEOs, right? And you just decide that you're going to restrict your own power. You're going to give up some of your power and give up some of your ill-gotten money for the greater good. Can you imagine that? It happens like almost never. And the United States was only the second example, at least that I'm aware of, in world history where that happened. Before that, the Magna Carta, another pretty amazing occurrence in the history of the human race. And since then, so many other countries have followed. And now we see the pendulum swinging the other way. And sadly, the US is very much in decline. Let's hope that turns around. We had a couple good Supreme Court rulings lately. I especially like the one last week where agency power, this fourth branch of government, the administrative state, the Supreme Court limited the power of these tyrannical agencies that aren't accountable to the electorate, aren't accountable to the American people. And that's good. Maybe we're going in the right direction. You know, there's some hope. We'll see how it all works out. All right. So there's the funny meme for you. It's pretty good. If you're only listening on audio, grab this one off of my YouTube video and you want to share this and spread it around. It's such a great meme. Anyway, today our guest is Peter Goodman. He's the author of a fantastic book called Davos Man. Talk about oppression. Talk about the elite class oppressing the people of the world. Well, that's what goes on in Davos, Switzerland at the World Economic Forum. You know, Klaus Schwab, you've heard of him by now. Anyway, this book was great. I finished it a few weeks ago, and I just had to get Peter on the show to talk about Davos Man, how billionaires devoured the world. No, folks, this is not capitalism. This is cronyism. It's a scam. And sadly, in the modern world, everything has become a scam. Also, thanks to Ashley for getting him on the show, I interviewed Vivek Ramaswamy on his book, Woke Inc., Inside Corporate America's Social Justice Scam. Interviewed him last week, and we'll have that interview published maybe next week or the week after, but it's such a fantastic book. These two books are must-reads. They really are, especially Woke Inc. I mean, that was just, I'm not finished with it yet. I got about maybe 1/4 left to go, but it's phenomenal. Just phenomenal. Everything has become a scam in the modern world. It's such a sad state of affairs. It really is. All right, so we'll get to our guest in a moment, but let's talk about the I word. Let's talk about inflation, another big scam. It's the 4th of July here for the U.S., and people are doing cookouts, barbecues, 2 pounds of ground beef in just 1 year. This is only 1 year. It has almost doubled in price. Chicken has gone up maybe, I don't know, what's that, about 35% in 1 year. The price of lemonade is up. Potato salad holding steady, burger buns holding steady. But can you imagine, this is just 1 year of inflation, folks. Only a year. Now, this is a perfect example of how the Consumer Price Index, another complete scam, the CPI, they manipulate the CPI in 3 major ways: weighting, substitution, and hedonic indexing. And this is a great example right here of substitution. So you see that ground beef has almost doubled in price in 1 year, just a year. And chicken breasts have gone way up too, but not as much. So what they assume in this basket of goods in the Consumer Price Index is that if the price of beef goes up, everybody will just switch to chicken. But maybe you don't like chicken. You think chicken's a dirty bird. So the substitution is something that they assume, and maybe we don't want to substitute. And that's how they hide real inflation from us. Also, you hear them talking about core inflation or headline inflation or the core rate. Well, the core rate strips out food and energy. Now, nobody on earth can live without food and energy. So, yeah, it's a complete scam. But inflation is just zooming, destroying the value of our savings, stocks, bonds, even our equity in real estate, but thankfully, destroying the value of debt. And that's why I created the strategy called inflation-induced debt destruction many, many years ago. It is the most beautiful hidden wealth creator. So take advantage of it. Listen to my other shows for more about inflation-induced debt destruction. There really are quite a few nuances to that it's important you understand. All right, let's talk about housing inventory. Then we'll get to our guest and we'll talk about Davos Man. Housing inventory, it's important that I report on this because in just 1 week, it is up by about 26,000 homes. Now, we are still far, far away from normal inventory. Inventory is still scarily low. It is very, very low. But as I predicted, and by the way, another one of my predictions coming true here, but also, as I admitted, I think I'm going to say I'm wrong about another prediction I made, and that was about New York City, that has come back much faster than I thought it would since the COVID fiasco. Anyway, I'm not right about all of them. I was wrong about interest rates. I was right about many, and I'm right about this one. And that is that the inventory increases are unevenly distributed. They are mostly distributed to the cyclical markets. And I want to give honorable mention specifically to Phoenix, Arizona, that really can no longer be called a hybrid market. That's going to be a cyclical market. Inventory has almost doubled in Phoenix. It is crazy how that has gone up. But other cyclical markets around the country, same story. Inventory is largely increasing, and it is heavily weighted in these cyclical markets. Hybrid markets, less so, and linear markets, much less so. That's what we like and recommend, those good, solid linear markets for your investment. Go to jasonhartman.com, click on the properties page to learn more about the best linear markets in which to invest. Also, before we get to our guest, I want to announce that I am busy this last week working with our on-staff economists and creating a new index. Yes. You know about the Hartman Comparison Index, the revolutionary index, the HCI, that helps you understand the real value of real estate by not just comparing it to one thing, the moving target called the US dollar, which would be completely erroneous, but comparing it to many things in a very large basket of goods and services. Well, I've got a new index that I'm going to be launching soon, and it focuses on income. Because as I have taught you for 18 years now, when I talk about my 3 dimensions of real estate strategy, you know that income and housing prices are non-correlating indicators. Very, very important to understand that. And so this new index is going to offer you tremendous insights into the income component of income property. It's so funny that everybody is just so myopic and they constantly talk about prices. And that's how they measure whether a market is good or bad, or an investment is good or bad. Are the prices going up? Are they going down? Are they stagnant? Not enough information, because we are yield investors. We invest for yield. We invest for value, for income. So I've got a new index launching very soon. Sleazy competitors, don't copy me like you always do about everything. Yeah, I got to just mention the sleazy, scummy, cheating, lying, stealing competitors out there. Yeah, with good cheer. Yeah, so imitation, sincerest form of flattery. That doesn't mean I have to like it. All right, so that new index is coming out soon, but just understand, as far as the inventory goes, we are still far, far away from even normal inventory. It is increasing quickly, and the question is, how quickly can we see housing inventory increase to 1 million homes, or as some experts believe is normal, to 1.2 or even 1.5 million homes? How quickly can it rise to that level to get to what is called a normal market? Not a down market, not a bad market, just a normal market. We are still far, far away from a normal market, inventory still being very, very low. And again, the inventory scarcity issue is dramatically more pronounced and more weighted on the low-end entry-level spectrum of the real estate market. Remember, we're just looking at the overall inventory when we talk about this stuff. Okay, so without further ado, that's it on inventory. I just had to give you that report today because it just came out, and it is very, very important to understand we are seeing substantial increases in inventory, but we're still far, far away from even what is considered a normal market. If you need assistance with your portfolio, if you'd like a free portfolio makeover, if you'd like to make sure you are determining the highest and best use for any assets you have, cash in the bank, money in the stock market, mutual funds, bonds, cryptocurrencies, whatever, and you're interested in income property, the most historically proven asset class in the entire world and the most tax-favored asset class in America, when taxes are the single largest expense in most people's life, go to jasonhartman.com, reach out to us. Also, be sure you check me out on social media. I have been killing it, just killing it on Instagram lately. Never paid much attention to that before, but I've got over 70,000 followers now. YouTube, we've got lots of great other content there for you. So make sure you check that out in all the right places. Not just the podcast, not just YouTube, but also social media. We've got a bunch of great clips, Instagram, Twitter, short clips, and things that we're posting on those platforms as well. All right, without further ado, let's talk about Davos Man with Peter Goodman. Here he is.